This one tip is going to save you over $20,000. So if you're looking to buy a house and you're like, I need more money for my down payment, or I need money to help me with closing costs, or you just want money left over to fix up the house, or whatever it is, this video is for you. My name is Marcelle, and I'm a licensed mortgage loan officer. My MLS number is 183-0011, and I help blue-collar workers get approved and get closed for a home instead of getting denied by the banks. So if that's you and you've been denied before and you're like stressing, I need help, I'm here to help you. All my information is in the description below, so message me. My team and I are looking forward to helping you. Now, most people don't understand the simple concept of seller's concession. So I'm going to break it down and I'm going to show you how, if you utilize this properly, you can save money, $20,000 or more, and how it can benefit you and also the seller. Imagine this: you're hungry, you're starving, and you're walking by this pizza restaurant. You smell that wonderful, delicious pizza, and you're like, I want some now. But unfortunately, you don't have the money on you right now. Let's say it's home, but you have a good friend with you, and this friend knows that you're trustworthy and you're able to pay back the money that you're borrowing from them. So you're like, yo, bro, let me hold 20. And they're like, I got you. Now, if they're real friends, they're probably like, I got you, but you gotta give me a little interest. That interest, or that friend, let's call them the bank. They are the lender. The money you're paying them back, the extra, is considered your interest. So instead of getting $20, right? Matter of fact, you did get $20, but you're gonna have to owe them $25. That's how mortgages work. You borrow money and you pay back more. Now, the key is you don't pay it back all at once. You can pay it back in time. Most mortgages are over 15 to 30 years, but we digress. We'll come back to that later. Now you got your $20 and now you're going into the pizza store. Boom, boom, boom. You're feeling excited. You know you're about to get this New York slice pizza. You're ecstatic, all right? What, for whatever reason, the clerk behind is in a really good mood. She's like, ooh, I like you. So you get a whole pie for $20. And just when you're leaving, she's like, wait, you know what? I got something else for you. Boom, she gives you back $5. Woo! You're like, really? She's like, yo, just give me a number. So not only did you get the pizza pie that you wanted, you got back an additional $5, right? That money that you get back, that's called seller's concession. See, the seller still got their money and you got $5 back, but you technically borrowed the money from your friend, aka the lender. So even though you got money, in the long run, you're still paying it back. So that's how seller's concession works. I'll explain it one more time. You go in to see a house. The house is worth, let's say the house is a beautiful house, is selling for $680,000. You put an offer in for $700,000 with a seller's concession of $20,000. See, the owner of the property is still getting the $680,000 that they wanted. Now that $20,000, you're still paying for it because you're getting the money from the bank, because the bank is going to loan you the money as long as the house appraises for that new higher amount. The seller's still getting the $680,000. You're getting the difference, which is the $20,000, as long as the house appraises for $700,000. The house appraises for $690,000. The bank isn't going to let you borrow more money than the house is worth. So now, instead of, if it appraises for $690,000, instead of getting $20,000 that you were hoping for, maybe you're only going to get $10,000 now, because $680,000 to $690,000 is only $10,000. But either way, you're getting back $10,000 because the seller said, hey, yeah, don't worry about it. I got my money. You can keep the difference. And that's what we call seller's concession. Now, the reason why you might want to do this if you're looking to buy a house is because maybe the house needs work. Maybe you don't have enough for closing costs. It could be different reasons. But the biggest thing is it's saving you money because you're borrowing money that you don't have to pay back immediately. Even if you have the $20,000 in your bank account, you can still do this. This is the wonderful news or wonderful world of banking. You can borrow money even if you have money. And what happens is, since you're paying it back over time, and like I said, most loans are either 15 to 30-year loans, it doesn't cost you much. So let's do the math. Let's say, in a good scenario, you have $20,000 divided by 30 years, and you make that payment over the years. Well, in mortgage terms, actually, we'll do $20,000 divided by 360, because in 30 years is 360 months. So you divide that, and each one of those increments, that number, that's what you would be paying back monthly. Now, obviously, you have interest on it, so the numbers would fluctuate a little bit higher, but that is the basics of sales concession. This is where it gets a little cooler, I should say. Now, when you're usually using sales concession, most people do it in the beginning. They do it when they're putting in their offer for the house, but that's not always the best time to do it. For example, let's say you're in contract to a home. Maybe you're in a contract for a house right now at this exact moment. You're in contract for a home and you're buying the house for $800,000, but the house is appraised for $900,000. That means the bank is like, "Ooh, this house is worth way more than you're buying it for." This is where you go back to your realtor and be like, "Hey, realtor, can we ask the seller side if they be willing to give me $50,000 in sales concession?" The seller's gonna be like, I already know this person who's in contract, the buyer already has the money to buy it. Maybe they just want that money to fix up the house because it needs work, or maybe they just want to buy a better interest rate, whatever the reason is. Most sellers, once they're already in contract, they don't care. They're already getting their money. So most 9 times out of 10, sellers gonna be like, yeah, whatever. They redo a contract, sign it. As long as the closing date's gonna stay the same, you speak to your loan officer. Loan officer's gonna be like, okay, move some numbers around. Give me a day or two. Go change the file. Boom, boom, boom. Boom. That tip alone just earned you $50,000 that now you can say, hey, loan officer, let me use some of this money to get a better interest rate. Loan officer, let me use some of this money to lower my closing costs. So now I don't need as much money out of my pocket on my closing costs. And I know I'm going to be paying it back, but it's over 360 months. Like the real Mr. Marcelle just taught me, this is going to let me take my cash and create cash flow because I can invest this money in other things. Another tip. Once you have cash, it is better to invest it than to put it all into your mortgage. You're probably like, Malcolm, why would I want to do that? Think about it. So let's say the interest rates are at 8% right now. Ooh, sounds scary, right? Now remember, you have $50,000 that you can either take out from the house, from the seller's concession, or use your own money. Now think about this. If you are in an investment right now, the average rate of return for the stock market is about 10%. So you have $50,000 getting 10%, right? That's $5,000. Would you rather take that money, that $50,000 out of this thing that's giving you $5,000, or, right? Would you take it out just to put it to cover the mortgage that is at an 8%? Think about it. You have 10% versus 8%. I would rather borrow the money at an 8% and keep my money where I'm getting a 10%. That's a 2% increase. That alone is how you make more money. See, when it comes to investing and when it comes to mortgages, most millionaires, billionaires, they still take mortgages. Do you know why? Because they understand the concept of money. And money says, I follow where I'm getting the highest return. That's why they say cash is always king. So if you're getting a higher return investing your money, why wouldn't you borrow it for cheaper? That is the wealth game. This is how you create generational wealth. And utilizing a simple concept like sales concession is not only going to save you $20,000 or more, actually creates income for you because you are borrowing money at some of the cheapest interest rates you can ever borrow. Don't believe me? Take a look at your credit card. Most interest rates on your credit card are 20, 25%. They're charging 20 to 25%, and you're scared at borrowing money from a bank at 8%. Do you see that? See, the bank understands the concept of interest and borrowing and return rates. We have to start understanding that same concept. Now, if you're going to borrow money, borrow it at the lowest interest rate possible. And even if it's high, make sure whatever investment or wherever you're putting your money into is a higher rate, because you will always win. Another case in point. Let's say we are borrowing money to do a 2-family. Let's say the interest rate is 10%, right? But if after doing your numbers, you're looking like, hey, if I do FHA, I'm putting down 3.5. I will do another video and explaining how it's easier to buy a multifamily than a single family. But we're going to save that for next week. So make sure you tune in. In this case, though, let's say you're doing all that work. Boom, you do the numbers. And you're borrowing money. Remember, I said at 10%. But you're making 15% from this investment. From buying that 2-family house, you're making 15%. Which one makes more sense? If you're understanding me now, you will realize that yes, the interest rate matters, but it also matters about how much money you are making from your investment or what you're utilizing the money for. Case in point, utilizing seller's concession can save you and create generational wealth. Just make sure you do it the proper way. Hopefully this video helped you and you understand the concept of seller's concession, and I didn't go too much off a tangent of comparing interest rates and actually creating money for you. If I did, put in the comment section, and I'll do another video with some actual numbers. Maybe I'll put a whiteboard back up and we'll go over the numbers together. But seller's concession is a hidden gem that most sellers don't actually use now. They don't use it, or they don't understand the right way to use it. So hopefully you get it. And if you are hungry too, then I did a great job. Let's go get some pizza together, and make sure it's a buffalo slice pizza. One of the best. Thank you. Over and out.